Welcome back, and joining us now on the show is PR Somasundaram. He is Regional CEO India at World Gold Council. Som, hi. I'm sure you're busy these days understanding on what the trends really are in the Indian gold market, because this is that time of the year when not just India but the global markets also are eyeing India on the buying patterns and trends here. So just a week to go for Diwali. What are you picking up on ground?
Well, demand certainly seems to have been very good during the Puja festivals.
Okay.
And as you know, Manisha, it's always very difficult to give a certain figure. So we have to talk about the aggregate figure that we saw last year and what we intend probably could see this year. As you know, last year, December quarter was the highest ever in the data series. 25 years we have seen 344 tons. We just didn't expect that kind of a spike because that had a lot of pent-up demand that supported the last quarter, and it was surprising to many industry players as well. This year, I don't think we will see that kind of demand scenario. However, it is much better than what we have seen in the first half, which was hardly 7% above the same time last year, which was not one of the best half ones. And we have just entered the third quarter, and we'll be releasing the figures next week. So it looks like this demand will be better. That's what we are hearing. Puja sales have been good, but the market is still at a discount. So there is a $1 discount I hear, so which tells you a lot about how the the trade looks at things.
Clearly. Last year we all understand it, so was a pent-up demand, and this is a second straight year of strong buying, as you said, continuing. But if last year was anything to go by, I've been talking to a lot of industry players, and they say even if it is as good as last year, even 5% less than last year, we would still count it on a stronger side. So that really is how the market is viewing it at. But another thing is that we now have a hallmarking, so there's no concern really about purity and condition of the gold that people are buying. But what do you think on how people are going to be buying this? Because when you talk to different players in the market, whether it's about physical, jewelry, minimalistic, simple designs, or digital gold, e-commerce, it is spread really across everywhere. How have you tracked down these numbers?
Well, jewelry will continue to be the biggest buying. There is no doubt about it. 80% will come through jewelry.
Okay.
Certainly during Dhanteras, people do buy coins, but then there are no branded coins in India other than what the jewelers sell. So obviously the organized players will garner a very high market share of that. But interestingly, the other ways of buying gold that you touched upon, digital gold or ETFs, certainly will also see a rise. But in the overall scheme, they are very, very small. The ETF is still about 40-45 tons as the AUM. Digital gold, while it has grown significantly, it is still very, very small. However, they are picking up. There is no doubt about it. There is a lot of interest, particularly in the urban areas, to buy gold on the digital mobile phones. And that you should see a very, very large spike. Still, as I said, the overall figure will be very small as compared with what we see in jewelry.
So we've been talking to a lot of industry players, and they said that global markets are not looking so good with what we are seeing in Europe and some parts in US as well. But the Indian demand, Asian demand seems good. With what we are going through in sense of fundamentals, whether it's about this talk about recession or a slowdown or a rate hike, what do you see impacting the gold prices and demand, if at all?
Well, as you know, in the short run, demand follows the price. I mean, it reacts to price. Demand doesn't determine the price. It is the US dollar strength. And we have seen that there is a certain softness, which despite all that is happening, even the rupee has depreciated, but we still see it is around 50,000 rupees. It hasn't gone to the high we have seen during COVID, which was 55,000 rupees. So in a sense, the consumer will see this price as attractive, no doubt about it. But there is also an expectation when the price is so soft that it will fall further. So you may see some people actually deferring the purchases. In terms of price, what do we see? Yeah, certainly currently the prices are affected by a very strong US dollar and the interest rates. Whether they are able to achieve the objectives of controlling inflation through this is a very important factor to watch out. And if it happens that in the next 2 quarters, this doesn't seem to be the case, you could see gold reacting very strongly upwards.
So, I have one final question since we have you with us. Last year has been very eventful for gold, if I can say so. We've seen highs, we've seen hallmarking mandatory, we've seen IIBX being introduced as well, import duty increased as well, not just for gold, but for platinum as well to, plug those gaps there. What are your expectations from the next Samvat, until the next Samvat?
Yeah, you mean in terms of the policy or
Yes.
Duties?
In sense of policies overall.
Well, in terms of policies, I think there isn't much that we expect now. I think what needs to be done has already been announced. It is now more of execution. We would definitely look forward to how the exchange work and the exchange actually changes the market. I think it's a very, very fundamental reform that has come through. There are lots of teething problems, no doubts about it. But I would think that that is one thing we will be watching out for. How does the exchange trading change not just the price transparency, but also the entire supply chain, the responsible sourcing, and the general trust that people can have in gold, and the way people can hold gold. And if EGRs, the electronic gold receipts, become available, you could see people actually move from jewelry to holding even dematerialized gold in a big way.